stream yesterday. You know, Cointelegraph stream got shut down yesterday. Several other individuals who were streaming the Bitcoin the Bitcoin halving event watch parties, they got taken down as well. Now we didn't get taken down. Let's see if we can get connected to YouTube here now. All right, we are live on YouTube now, but with a different link. So if you guys want to go over to YouTube, yep, so if you guys want to head over to the new link, then that one will work. And I'll have the team post that. I'll have the team post that in the Discord. All right, with that out of the way. Okay, so we are live now. We'll just edit out the start, right? We'll just edit out the start. So before we begin, make sure that you guys go check out my interview with John Ehlers. That was a fantastic interview. If you are interested in algorithmic trading or building strategy testers, whether that be for back testing or for walk forward optimizations of live strategies, what most would consider forward testing, it's a fantastic interview. Or if you're interested in applying digital signal processing to your trading, analyzing price structure as a waveform and figuring out how you can utilize that to increase your edge. It's a fantastic interview. Very knowledgeable individual, analyst and trader. Also, make sure to go check out Spectre Security Coin's Data Hunt event. It is going on live right now. You can sign up to go win yourself some free cryptocurrency. You can go to datahunt.spectresecurity.io. Highly recommend you guys take part in that. With that being said, I want to get over to the charts because we've got so much to talk about. Actually, I'm going to have to pull up the YouTube chat from the new live event because I didn't have that open. So let me just get that pulled open over here real quick. Pop out that chat. Okay. And we are good to go. All right. So sorry about that, guys, but we are up and running now. We're up and running now. All right. So with all that being said, let's get over to the charts because there's so much that I want to talk about today. All right. Here we are in the live scene. All right. We've got the daily time frame of Bitcoin pulled up. Eli back. First off, thank you so much. Thank you so much for the $10 tip, my friend. He says, good afternoon, Justin. The main net is about to go live in about 2 weeks on Haven Protocol. Could I please do some technical analysis on this coin? I would love to, my friend. Let's cover Bitcoin, and then we'll get to XHV. Let's go over the technicals. Hopefully they don't get front run by fundamentals. We'll kind of see. We'll just take a look, like with that information in mind, right? With that information in mind, and with a whole lot of the market kind of signaling that they believe, a lot of individuals believing that now that we've had the Bitcoin halving and the nice run up, we're going to see Bitcoin consolidate, go sideways, most likely move to the downside, and we're going to be seeing an alt season. So fundamentals are going to get front run. So we'll kind of take a look and see if XHV has already been front run, if it's already gone through its appreciation cycle and this is a sell the news event, or whether there's still some gas left in the tank. We do see some potential for price appreciation on XHV. All right, with that being said, let's break down the daily time frame. Obviously, Bitcoin putting in a decent move back up to the upside right now, testing the bottom boundary of the baseline, but we will start from the beginning. We'll start from the beginning and walk our way forward. So we're on the daily time frame. We're looking at the ByBit chart. Let's actually go look at the Bitstamp chart because, we can trust Bitstamp, right? We can trust Bitstamp. It's good for our nice long-term fundamentals, especially looking at our swing trading here on the daily. So a couple of things appear to me here. We are below the daily baseline. That indicates that the overall trend is bearish. Price has moved contrary to bearish positions right now at this point in time. In drawdown, if one had entered on the close below the baseline initially for a hedge, and if one had entered into full risk on yesterday's close when we actually ended up cracking what I consider to be the breaking Bitcoin system initiator. It's not really I consider it to be, that is what it is. It broke that level. We are having a contrary move back up against bears at this point in time. I'm not really seeing there's not any technical signs here that indicate a reversal in trend. That's going to take more bullish movement to the upside. This will become more clear as we go down the time frames and kind of look at all the pieces that are putting together the daily puzzle. But anyways, on the daily, we have a couple things here for potential trading. Earlier today, we were signaling a bottom feeder reversal trade. Price has moved up too far. That signal is now invalid. It was calling for take profit around 9,200. That's also an area, a technical area, where a few of the traders in the members lounge were talking about earlier with regards to the upper boundary of the previous CME gap. Now, the actual CME gap's all the way up at 9,800, and that's going to be quite a movement up if we actually do end up getting there. That we will look at when we get down to the lower time frames on Bitcoin and we look at kind of intraday trading strategies or intraday trading signals, potential intraday trading signals. So from my perspective, there are a couple options on the table here. Reversal baseline bounce, a reversal baseline bounce entry trade. Right now, if one wants to short the market, price has moved back up into, it's not really moved back up, it never exited the optimum entry area, which is between the daily baseline and the qualifying line. So right there is the optimum area for entry. We're still within that area, and more generously, price has actually moved up to the baseline, which is the area where we can initiate reversal baseline bounces in the direction of the dominant trend. And the dominant trend right now has flipped to the downside. So one would be looking to go short, utilizing your regular Quadriga ATR for your stop and target system off of this setup, or potentially an area to add to one short position to DCA into a better average entry in this price area. That's basically it on the daily. Obviously, Paralox has flipped bearish. Paralox is not signaling that one should be going long right now. Minx has flipped bearish. Minx is not signaling that anybody should be going long right now. There are no continuation signals to the upside for longs, and there's no primary signals to the upside for longs. For that to occur, we need to close above 91.23 on the daily to invalidate short hedges. We need to close above 93.53 on the daily to be signaling for potential long at-risk trades. Potential long at-risk trades. So above 91.23, you could be spot long. Above 93.53, you could be you could have trades on. You could have at-risk leverage longs on, for example, right? That's about it. The daily is actually quite simple. The daily is actually quite concrete. Wadatar explosion continues to give us and signal for rising volatility, indicating that directional trades have a higher statistical probability to be profitable in this area. So the daily is quite clear, quite concrete. I will be adding to my short position as we get closer to daily close, assuming that we don't get anything intraday that actually violates that, which again, will happen if we move up about another $300, $400. We'll be invalidating those maneuvers, and that's okay. It's totally fine. It all washes out in the end. Let's go over to the meso timeframes here today. On the 2-hour time frame, we're not getting any trending signals right now on the Cybot. Bottom feeder just completed 4 successful trades on the 2-hour time frame over here, DCAing into a reversal long and taking profit on this wick to the upside. No subsequent signals coming out of bottom feeder and no trending signals coming out of Cybot right now at this point in time. The 4-hour is quiet on the eastern seaboard. We had 1 losing trade from bottom feeder actually off of this wick, and then 2 winning trades from bottom feeder off of these 2 trades, successfully taking profit on this wick to the upside. Other than that, all is fairly quiet on the 2-hour and the 4-hour front over here insofar as automated strategies. Looking at the that was not what I wanted. Looking at the 45-minute time frame. Looking at the 45-minute time frame, we are trading above today's daily point of control. ISIS spot has not signaled for a reversal trade yet at this point in time. Needs a little bit more price appreciation, but assuming that it will be giving kind of that reversal sell signal. And again, this is about a 1-2% scalping strategy that I've developed that operates on the 45-minute time frame. It has not given us any such signals. We are back up at previous resistance and moving sideways. If we do end up breaking bull to the upside here, obviously what are going to be the potential targets? Those are going to be predicated off of what Quadriga gives us. They're going to be predicated off of what Quadriga gives us. But again, if we do decouple here, and we're going to get to this correlation here in just a little bit, because the big thing that I'm thinking of here is the S&P 500, which I don't think that people are really watching. If the SPY ends up really dumping here, because yesterday the SPY put in a doji at resistance. Today, right before I went live, the SPY was putting in a doji, and it was my estimation, my prediction, that we were actually going to see the SPY drop off. Now, if that does happen, I expect Bitcoin naturally as a risk on asset right now as it's being traded to follow along with it. So if one is kind of looking for the cause, the reason, or the catalyst that would kind of precede Bitcoin's price to the downside, it doesn't have to be minor capitulation, which we'll get into here in a minute. It can just be natural market dynamics. But again, overall here on the 45-minute time frame, Bitcoin at resistance, ISA spot nearing the overbought area, crossing under the signal line, meaning that we can actually get a pullback down at least to the daily point of control around 87.53. If we do end up breaking resistance here and really putting in this bullish momentum to the upside, what is the upside target? It's going to be 9,800 because that's going to be the filling the gap. We'll see that. Let's go over to the CME chart to look at that. Here's the Bitcoin CME chart right here. We have a new gap. So the yellow box territory was the previous CME gap. Following the March meltdown in Bitcoin's price activity, you can see we rallied all the way back up to fill that gap, consolidated, and then pushed up. And then, of course, we had the big sell-off following just this Sunday, which has formed this new gap, this green box territory. We have broached up into the lower area of the gap. And again, the bulls in the house are going to be calling for about a 9% rally here, all the way up to about 98.20, which is actually where the gap is on the CME. Obviously, that is not the trade setup that I'm looking for. That is not the trade setup that I'm looking for. As you can see, what we've basically done here, in my opinion, just looking at the CME chart and looking at support and resistance the way that most individuals would look at support and resistance on the CME chart, we broke back down into the lower accumulation area, which is this yellow box territory here on the CME. We traded up, we got bid up. We are now testing the upper boundary of that resistance. So we are testing previous support, previous breakthrough level, essentially, right? As new resistance, right? As new resistance. Again, if that holds, next inbound area is going to be the 8,200s and most likely the 7,000s, because I do believe that that is what is most likely to happen following the halving event. All right. Having said that, so again, overall fairly quiet as far as where I am positioned. Again, I have my positions on ByBit. If you guys want to trade on the exchange that I trade on, it is right now. ByBit is my favorite exchange right now for utilizing futures positions on Bitcoin. I like their USDT product. I like their inverse perpetual product. It's integrated with 3 commas, so you can run a bot on there very nicely. I have a short on the inverse perpetual contract. I have a short on the USDT perpetual contract as well. So I use the inverse perpetual contract for my hedge. And then in addition to that, I also am utilizing the USDT perpetual contract for my at-risk short. So I have 2 shorts combined. I'm utilizing USDT and the inverse perpetual contract to do both of those, and then doing Binance margin for my other positions. Which Alex has been signaling lately and doing a fantastic job of it. Alex was up over 60% in P&L yesterday, and really, really proud of him. Doing a fantastic job, senior analyst in the group. So with that being said, we can look at Renko. The other thing that I wanted to point out, is when we're looking at the BitMEX funding and premium index by neobutane, predicted funding has crept back into the positive territory. So we are seeing it is predicted that that the funding rate is going to switch to be long. Now, the funding rate is overall predicted to be fairly low, not 2. But we do still see backwardation in price, which overall means that there is more aggressive selling going on. Zuhair Nakvi, thank you so much for the 5 Aussie, my friend. Looking for that Australian dollar to appreciate. Hopefully that is $5.23 by the end of the day. Hopefully you're doing well over there, Zuhair. He says, could I look at the CME in relation to the daily baseline? Certainly I could, sir. So we will go to FX and we will just type in cracking and we will pull up the daily baseline. On the CME gap, we do have a reversal baseline bounce. 60 period, pulled right back down to the baseline and appreciated off of it. So let's take a look here. If we'd have been utilizing, let's make it easy. We could use, let's just use Quadriga. Quadriga average true range. And go ahead and hide our lines here for a little bit. It's going to be easier. So let's look at what ATR was on yesterday's daily close. It was 678. So if one had entered at the daily baseline yesterday, right around this area, looking for a TP of 678, That would have cleared at about 88.95, 8900, and that trade would be over with. So you would have had a successful reversal baseline bounce, taking profit, entering around the $8,300 area and taking profit around the $89,000 area, and that trade is completed. I know Mr. Hutt took that trade because he uses the SMA 23 as his daily baseline. And if we look over at, let's get rid of this for right now. And actually, I want to go back to that chart and bring back my lines. Okay. Let's go over to the daily here. And we'll take this off and we will just put in simple moving average 23. And very similar thing. Reversal baseline bounce here, successful trade here, successful trade here. And if you didn't catch it on this wick, successful trade here. Now that is not the baseline that I use. You use the Hall 60. Cryptbug update on the competition details on ByBit. Are the senior analysts killing it? I did pretty good. I think I came in about 5th place. I think I came in 5th or 6th place. I played it pretty conservatively during the competition. Let's see here. The other traders did really good. We posted it out on Twitter. We posted the top 5 winners. They did get prizes distributed to them. And I really appreciate ByBit putting the competition on for us. Everybody came out. Again, there was about 40 individuals took place. Roughly half of those ended in the green, about half of ended in the negative. There was only about 3 or 5 individuals that actually ended up with some significant drawdown. I know that there were 2 individuals that one of them ended up withdrawing and didn't really participate in the competition. They had some personal things going on, and that's fine, but that reflected as basically negative 100. And then the other individual ended up having probably just realistically, I want to say an exchange issue, but it's not an exchange issue. An error with a stop loss placement ended up occurring a pretty large loss that was fairly difficult to come back from. And then the others just didn't trade very well. The other about 3 individuals just didn't end up trading very well. So, but yeah, most of the members did really well. I'm actually really proud of them. And that competition was a lot of fun. And I'm looking forward to having another one probably here in a few months, or maybe we'll do something on Binance. All right, let's see here. With that being said, I want to talk about some Bitcoin fundamentals before we go on and look at the rest of the market here. Now, just some quick facts for you guys as of yesterday. So I want to talk about transactions per minute jumped to about 3 times the monthly average. There was 700 transactions per minute yesterday versus 250 transactions per minute, which was the weekly average moving into there. Over 180,000 Bitcoin exchanged hands last night, a ton of volume. Futures volume was lower yesterday on Sunday, just shy of about 40 billion. And as of the latest metrics that I have from Glassnode's, hash and Quandl hash rate is down about 7% as of yesterday's close off of Sunday, from about 135 exahashes on Sunday to 125 exahashes yesterday. Miner revenue is also down about 13% from 2,188 to 1,901. ASOPR. Let's go look at this. This is also a metric from Glassnode. So we currently have the 7-day moving average. We'll take the 7-day moving average off. So this is ASOPR. We'll go back to the beginning of 2018 so you guys can see kind of the relevance. And generally when ASOPR is below 1, when it's below a correlation of 1 or a coefficient of 1, then price is trending to the downside. When it is above, it is trending to the upside or about to reverse. And this is just a measure of spent output profit ratio, basically price paid versus price received. So the cost to create a coin versus the cost to get rid of a coin versus the profit from getting rid of a coin. And I resemble that remark, Ron says. And we are in the negative territory as Bitcoin is trending down. So this is a metric that I look for. This is just a little bit more bearish confluence here. And this is hinting at further bearish movement. Derivative volume is also down about 12%. So by the way, we will just go look at, let's get rid of this and we'll just look at mining here. So we can see hash rate here. Get this zoomed in. Okay, hash rate not down a whole lot, down about 7% on the daily. You know, again, hash rate is extremely volatile, so that's not a huge amount. We really need to see a few weeks play out to see overall how this this progression in mining will play out in the long run. My opinion is that it will be negative in the short term, very positive in the long run. Miner revenue equally down about 13%, a little bit more volatile of a swing down there, but again, highly volatile metric. Let's look at derivatives daily volume. Derivatives daily volume down just a little bit off of yesterday. Again, down about 12%, which, you know, kind of is a fairly significant dip, but again, volume, another volatile metric. Open interest hasn't significantly changed a whole lot from Sunday to Monday. Open interest largely remained flat, up about 0.5%. Now that is up higher now. And the funding rate overall did go negative. Perpetual funding rate on the perp swaps did end up going negative, and it hasn't been negative since the end of April. So for the first time, we're moving kind of into the middle of May here, and we've had a positive funding rate, and indicating that a lot of individuals were buying. And of course, now we have slipped into a negative funding rate off of yesterday's bearish movement. So we'll kind of see again. So this kind of reactionary bounce back doesn't really surprise me, to kind of stop out shorts that kind of shorted the bottom or aren't practicing good risk management or good stop loss placement. But I think that overall, those who are trading to the downside will be rewarded. But again, overall, the charts will be the determiner of that. Market capitalization remained flat for Bitcoin moving into yesterday. That market capitalization is up a little bit. So obviously, I want to talk about some reasons why everything is occurring here. So getting back into the charts here and talking about Bitcoin, obviously the halving occurred yesterday. Bitcoin's block reward was halved. It had a halving at block 630,000. That's when the block reward reduced from 12.5 to 6.25. This is the third such event in Bitcoin's history. Obviously, yesterday, prior to the halving, we saw a run up to 9,200. We then traded back down to 8,500, where we consolidated all day. Price at the actual event of the halving was about $8,540. We can see that all play out right here. Again, we can see the short-lived rally to 9,200, and then we dropped back down and basically consolidated for the majority of the stream and basically for the majority of all day yesterday. Not a whole lot of interesting price action. Now, we here at Cracking Crypotcurrency celebrated with yesterday's 4-hour live stream. I want to thank you for all the support. There was about 200 viewers throughout the entire live stream. It was a lot of fun. Thank you guys so much for the likes, for the support, for the subscriptions. Now, because I am me, and I am interested in the things that I'm interested in, the final block mined at the 12.5 block reward contained a message echoing the very first block that was ever mined by Satoshi on the Bitcoin blockchain. If you guys will recall, the very first block ever that was mined had a message referencing the European bailouts. And yesterday, F2 Pool was the mining pool that mined the last block at 12.5. Their message contained in the Coinbase, in the Coinbase data, a reference that kind of harkened back to that, right? That referenced the current Fed bailouts. Here I have it from Blockchair right here. New York Times, 09 April 2020, with 2.3 trillion injection. Fed's plan far exceeds 2008 rescue. And again, this is just a beautiful, callback to the original block, the very first block that was ever mined on the Bitcoin blockchain. And again, just harkens to the very economic reason Bitcoin was created. Here we are, a little over a decade after the financial crisis, and we find our leaders and our institutions repeating the exact same mistakes. And why are they repeating the exact same mistakes? Because they only have a very simple playbook. Their playbook isn't actually very good. They didn't actually fix any of the holes in the system that were created in 2008, not created in 2008, unearthed in 2008. They've been created by this entire idea of modern monetary theory and central bank, fractional reserve lending, which is basically the issue. All right. Now, question of the day here. And I want you guys to think hard about this, right? When do you plan on selling your Bitcoin? Right? Like, when do you plan on, why are you in Bitcoin? When do you plan to sell? Every single one of you watching the show is likely holding on to some Bitcoin. And what is your exit plan, right? What if, does price have to move up 100x, 10x, 1000x? You have a set monetary number, a set profit number, or are you one of the proud, the few, the brave who refuse to sell your Bitcoin at any price because you see it for what it truly is, which is a replacement for the fiat monetary system? And your thinking is that why would I trade away a valuable commodity, a valuable asset that can be utilized as a medium of exchange, a unit of account, and a store of value for worthless inflationary paper? You know, are you one of the few who don't just believe that this is a meme? All right. Of course, this is the infamous Matrix, Neo, and Morpheus meme, where you have Neo saying, what are you trying to tell me? That I can trade my Bitcoin for millions someday? And let's see here if I can get it. No, Neo, I'm trying to tell you that when you're ready, you won't have to. So, this is a serious question, right? This is a serious question. When do you plan on selling your Bitcoin? Are you in here for the profit? You do not feel that the fiat monetary system is crumbling. You feel that the holes will be patched, or even if they won't be patched, hey, it's not going anywhere, right? Defeatist attitude. Eventually we'll sell Bitcoin. It'll be really high and it'll be cool, and we can use it sometimes if I ever want to get around the government, or send money to if I ever want to buy something off the dark web. But overall, it's just a means to an end, and the means to the end is having more wealth. Or is Bitcoin itself the wealth? All right. Let me know in the comments section down below. I'm really interested. I'm going to reply to as many of them as I can. I don't have a link for this, but Vitalik Buterin had an interview with, I can't remember if it was Cointelegraph or who he had an interview with yesterday, but he confirmed that Ethereum 2.0 will be slated for a July release. Other Ethereum developers have come out and said that the Beacon chain and several other implementations are already live and being tested and debugged currently right now. So he is saying, that for sure, he confirms that Ethereum 2.0 will be launching in July. That means we've got 2 months to see a run up to Ethereum. So kind of the question here for the speculators is, should we be accumulating now? Should we be accumulating ETH now? Is ETH going to decouple and we're going to see ETH put in its own like little baby bull run here? Is it going to put in a big old toddler bull run? Or, are we going to see are we not going to see a huge run up to price, that the accumulation's already been done and we're in the distribution phase right now, and it's going to follow Bitcoin down if Bitcoin ends up deciding to take a tumble here? Obviously today we've got a very bullish day for the altcoins out there, so people aren't far off when they're talking about alt season. But again, everything kind of moving up with Bitcoin having a volatile price movement. This is measured against the USD. If we look at how things are performing against BTC, again, not as great. Of course, we do have some overperformers here. Of course, we've got ANT, we've got REN, RDD, Theta. Most of these I wouldn't really trade. Digibyte, maybe. Matic, yes. REN, yes. Zilliqua, yes. Waves, yes. Not very familiar with this Unibright or UMA. Engine Coin up 10%. Pretty big fan of Engine Coin. And Redcoin, again, we've made a lot of money trading Redcoin. So let me know if you guys think that the alt season is right around the corner. I'm doing that's currently what we're working on right now, is our kind of long-term analysis and our projections for the altcoin markets moving forward. We'll be publishing that over the next few days. Actually, over the next week. All right. Now, factors to consider, and we'll be covering this kind of in more detail here in just a little bit, but we've talked about minor capitulation, right? And factors to consider, contrary factors to consider, if we don't see minor capitulation, right? Like oil prices are at record lows. The Sichuan province in China is about to enter its rainy season, and that is where a majority of Bitcoin mining is located. If mining farms are well capitalized enough, that means they have a buffer of cash to weather the storm of economic downturn. We might not see this catalyzing capitulation of miners, or it could just be waiting to happen as soon as everyone FOMOs back in on this mini pump. And we'll be covering this in more detail here in just a little bit. But of course, the Federal Reserve is about to launch their illegal program of buying ETFs. This is against the Federal Reserve Act of 1913. This is against their charter. In other news, of course, I can't remember exactly who it was yesterday. It was MT Coiner. Yesterday, MT Coiner came out yesterday and told me that Adam Back was Satoshi Nakamoto. This has become a fairly popular Reddit thread and obviously a YouTube video now unmasking Satoshi Nakamoto, where the allegation is kind of made that Adam Back is Satoshi. And I reviewed this video, and it, you know, to me, there's some what may be considered compelling arguments, but I don't know. First off, I don't believe that Adam Back is Satoshi Nakamoto. There are some coincidences in here that I think are kind of pointed out too much. I don't think that the spelling and typography is exactly correct. Yes, he is, you know, he's British. Yes, he knows C++. There are some similarities, but those are similarities that would be fairly common in the cypherpunk community, which Adam Back was. So overall, I don't think that that Adam Back is Satoshi Nakamoto. He has come out on Twitter denying that he is Satoshi Nakamoto and kind of explaining this. So make sure to go check out that tweet on Twitter if you guys want a little bit more information on Adam Back denying that he is Satoshi Nakamoto. And again, I talked about this yesterday in pretty deep detail. You know, it doesn't matter who Satoshi Nakamoto is. You know, the entire point, I do agree with Adam on this one, that it's better for Satoshi to remain anonymous because human beings have this kind of built trait to seek leadership, to want to promote people to be gods or kings, and, you know, follow their lead, to seek to be ruled. And that is exactly what a currency or a self-sovereign currency like Bitcoin is designed to kind of work against, right? To go against the grain, to go against the curve, to give people the ability and the right to be their own sovereign when it comes to their money. To make it, to have currency that is unconfiscatable, to have a store of value that is unconfiscatable, and really encourage and be a baseline for a society that can be built and based off human liberty and freedom, which fiat currency, which is centralized from a command and control system of tyrannical government, cannot be. So while I do think that it doesn't matter who Satoshi Nakamoto is, it doesn't matter why they built Bitcoin, what their intention was, what their background is, whether they're the aliens or the Illuminati or the CIA, it doesn't matter. It doesn't matter. Bitcoin is open source code. It can be verified. It can be audited. You can run your own full node. If the CIA built this, they built possibly the worst possible tool they could build for a command and control possible system, just because of the ability of self-sovereignty. Furthermore, we talked yesterday, but I'll mention it here again. The idea of Satoshi's coins, right? The 1 million or so Bitcoin that is supposedly stashed, and Craig Wright says that he have, and that will prove that he's Satoshi Nakamoto. So first off, anybody who moves Satoshi's coins would not prove that they are Satoshi Nakamoto. All it would prove is that they have somehow gained access to those private keys. Whoever Satoshi was, he or they or her could have been murdered or assassinated or died of natural causes. It's possible that they were stolen or thefted or for any other reason. So moving those coins doesn't prove that anybody is anybody. It only proves that somebody gained access to private keys. And the idea that if those coins ever moved, it would be disastrous. It would be disastrous for Bitcoin. Doom, I tell you. Doom. Oh, let me try that with a voice effect, right? Doom. So that's ridiculous. It's not true. It doesn't matter if those coins ever move or don't ever move. If those coins ever move, who cares, right? Whales move many large amounts of coin every single day. It would just be a relatively large move, maybe the largest transfer if all of them moved at once in mass. Who cares? Like, who cares? The worst thing that they could do is move on to an exchange and then somebody hits the red button. Okay, and then price goes down, probably quite a lot. And then it gets bought back up, right? Bitcoin has its own demand and supply economics, and if you allow an amount of currency that is already calculated in the circulating supply, but is considered kind of lost or set aside or segregated, right? So it's not actually circulating. And then you kick that into circulating supply. It's going to take a few months for supply, maybe 6 months, maybe a year for supply and demand economics to work themselves out. Okay. And then we never have that. And then we don't have that albatross around our neck ever again, right? Because right now, like, the conversation that you have to have once in a while is like, well, what if somebody ever moves Satoshi's coins? And I have to be the only person in the room who says, doesn't matter. Because it doesn't matter. It's a silly proposition. It doesn't matter. So yeah, it doesn't matter. And if they ever got the worst thing the worst thing in the short term is that they would be market sold, or distributed. Okay, so cool. They enter into circulation, and now there's more Bitcoin to go around for everybody else. And price goes down, buy the dip, price goes back up. Moving on. Yes, Please, oh Satoshi, drop thy coins upon us, sir. Fatten my bags. All right, so I want to get to today's cryptocurrency segment. If you guys have any questions, make sure to drop them in the chat. The moderators will bring them to my attention. If this is your first time to the channel, make sure to hit the subscribe button and the notification bell. That is the only way that I can guarantee that you will be notified when we go live, and we do go live every single day, as well as post content throughout the day to keep you updated on the markets, as well as the fundamentals of Bitcoin and the cryptocurrency markets. But hey, this is YouTube. And Google's recent algorithm update has, that's so good for the crypto YouTubers, right? So again, if you hit the subscribe button and the notification bell, you'll get notifications no matter what. You can customize the notifications so we don't have to bug you if you don't like it, and it helps support the channel. Make sure to smash the like button because that does help the channel out, if we even get a chance to get in the feed, does push us up higher in the feed and lets people find this valuable information at a time when more people need to find channels like this more than ever before. With that being said, we're going to move on to the cryptocurrency segment. Let's go. All right, now we want to talk about the 4 reasons the Bitcoin halving will not trigger a big minor capitulation. Now, obviously, we've covered how we could have and most likely will have a large minor capitulation, but let's look at the contrary opinions. Now, obviously, a popular narrative has emerged in recent weeks, and that is concerning Bitcoin's halving, the halving of the block reward, and how the block reward getting cut in half may trigger the capitulation of miners, resulting in this so-called mining death spiral, a topic we've covered a lot this year, particularly as we were leading up to the halving event. Now, you can, of course, check out our last video entitled Miner Death Spirals Explained, but we'll go over the concepts briefly here today for your benefit. Now, what's interesting in this Cointelegraph article published earlier this morning is that it suggests that any calls for a minor capitulation within the industry are overblown, and one should curb any expectation of a widespread minor shutdown in 2020 or the price being brought down as a result. That this is just total FUD, not true. There's no facts behind this. Some industry executives have been warning the price of Bitcoin may drop following the 2020 halving event, which took place yesterday. Not just executives, not just analysts, everybody across everybody everywhere. Miner revenues are projected to drop substantially immediately following the halving. It's already begun as the block reward was cut in half, and it's going to remain cut in half. It's not going to go back to 12.5 moving forward. Typically, the first to close shop are the over-leveraged and smaller mining operations. They're forced to shut down their machines or operate at a significant loss for an extended period of time on the speculative hope that Bitcoin's price goes up and they can recoup all of their losses. Now, Charles Edwards, he's the digital asset manager over at Capriol.io. We referenced this yesterday, described the 2020 halving as the most brutal in Bitcoin's history, saying the estimated production cost for each Bitcoin is about to double to $14,000. That is nearly 70% above the current price. And he pointed out that during the last halving, Bitcoin was just 10% below production cost at that time. And we saw a 20 to 30% decrease in price. Quoting, "This will be the most brutal Bitcoin halving in history. Production cost is about to double to $14,000. That's 70% above current price. Last halving, price was just 10% below production cost, and price and hash rate collapsed negative 20%. Without FOMO now, expect a big minor capitulation, 30% plus." Now, again, I think that's true. Like, without a strong surge of buying, fear of missing out coming into the markets right now, we should prepare for a pretty large 30% or even greater drop when and if miners begin to capitulate. Like, mentally prepare yourself for that, right? And interestingly enough, like, a lot of respect to some of these people who posted in, but of all the people who posted in, right, there are some interesting things here. There are some interesting comments here. So definitely go check this thread out. And Charles did a pretty good job of slapping everybody down who came out, except for what we're going to cover today, right? And you can even see this in his latest reply. Of all the comments, this is perhaps the best cause for positivism. Oil prices are down negative 50% year over year. Unsure how much of that benefit has rolled into global average electrical costs yet. And he says he'll keep his eyes out for the CoinShares report. But, I know that Bitcoin Jack had posted some stuff and he, didn't end up, coming back for the debate there. However, the capitulation theory goes a little something like this. As unprofitable miners begin to shut down, they dip into their Bitcoin reserves and begin selling those assets, whether it's to get them through a challenging few months or whether they're exiting the industry altogether because they know that they're just not going to be able to compete. They can't afford new mining systems, right? The S9s are gone. Like, those are not going to be profitable. Those are largely not coming back. So as these miners are emptying their bags onto the market, it adds significant selling pressure, and a tumbling price leads to more miners operating unprofitably, which leads them to shut down or dump what's left of their Bitcoin holdings onto the market, and on and on and on. The cycle goes, in theory at least, leading to what's known as the mining death spiral. Then difficulty adjusts and everything goes back to normal, but it lasts for about 2 weeks. But not so fast, says this Cointelegraph article. The 2020 halving has many more variables at play than just the proposed mining death spiral, which may prevent such a trend from occurring. So they presented here 4 arguments as to why miners may not be tapping out just yet. Reason number 1 is cheaper electricity in China and less demand for energy worldwide, thanks in part due to the coronavirus lockdown. This is the Bitcoin mining map from Cambridge Bitcoin electricity consumption, the Cambridge Bitcoin electricity consumption index. China, of course, is said to contribute nearly 65% of all of the Bitcoin network's computing power, according to the latest data coming out of Cambridge University. Referencing this map, we can just see, China's right here. All right. Furthermore, the Chinese province of Sichuan is where a great deal of China's mining operations are located, and that province is about to enter into its rainy season, with most of their energy generators relying on hydropower to generate energy. The rainy season, with its abundance of water, means that there is a glut of energy generation in that region expected over the next several months, which gives the large-scale mining farms there the ability to negotiate very favorable electricity rates, and by leaning in to this cheap energy supply, they can effectively ride out the first several months post-halving until difficulty adjustment kicks in and all is well. Number 2, cheaper electricity and energy globally. Now, obviously, we are in the midst of a global pandemic or a plandemic, with worldwide lockdown and stay-at-home orders being implemented and still not being lifted fully. There has been a major drop in electricity usage, with factories and millions of small businesses continuing to be shuttered. Energy costs have already dropped for jurisdictions around the world, which is a crucial part of the equation on whether a miner is profitable or not, the input cost of the electricity. With dropping electricity rates, record low global oil prices, and the industry-leading mining operations having had months to prepare for an extended period of unprofitability, stacking cash aside, stuffing it into shoe boxes, putting it in the shoes, so this article, concludes that the risk of miner capitulation due to energy cost concerns is quite low. The third reason that one shouldn't panic is that weaker international currencies mean lower operational costs. Basically, this means that the global pandemic has basically brought down valuations of national currencies, whereas the revenue from Bitcoin mining is generated in Bitcoin and then sold against national currencies, meaning that because Bitcoin's value has gone up against the world reserve currency, that is the dollar, and because operational costs are typically paid out in the local national fiat currencies, which have gone down overall relatively while Bitcoin has gone up, therefore, the Bitcoin that they are actually selling from the proceeds of their mining, it buys more. It packs a larger punch per pound, right? So it has more purchasing power, so that they can actually afford that. This actually acts as an exponent in the equation of mining profitability with regards to what they're able to purchase or reduce their with regards to what they're able to purchase and afford as far as overhead, electricity costs, rent, paying their employees, all of these kind of things. So this actually, again, as I said, kind of adds an exponent in there, a multiplying factor. It makes it a multiplicative equation and allows miners to actually be in a better situation than we might otherwise claim them to be. Now, this halving could be the most brutal in history, but it is all just a best guess. There hasn't been a comprehensive report published in weeks to talk about this kind of current geopolitical and economic conditions and how they will impact mining and the price of Bitcoin. That is a quote from Hash 8. Now, the fourth thing, the final reason why we might not see miner capitulation is the mining difficulty adjustment. So when the number of miners participating on the Bitcoin network begins to decline as a result of dropping price and fewer block rewards, the difficulty of mining those blocks adjusts down, which helps maintain a steady block interval and renews the incentive to miners who threw in the towel just a couple weeks ago. And it attracts them back with a return to mining with less computational input required thanks to that dropping difficulty setting. Now, the network automatically adjusts how difficult it is to mine these Bitcoin every 2016 blocks. That's roughly every 2 weeks with average block time. If the network's computing power, also known as the hash rate, drops off or rises for that matter, the difficulty is going to adjust in a way to stop a cascade of miners capitulating. So a dropping hash rate inevitably results in a cheaper opportunity to mine Bitcoin, slowly bringing miners who were kind of stuck on the bench back into the game. So in conclusion, there are a lot of reasons. In conclusion, today, a 5-hour stream? I was exhausted after yesterday's stream. That's a good one, though. I appreciate everybody coming out. So in conclusion, there are a lot of, in my opinion, good reasons why we are going to see minor capitulation. However, we do want to take a look at these contrary factors, consider the geopolitical situation that we're going to be in, and not discount these other things. Of course, minor capitulation is not guaranteed. I think that we're yet to see the true fallout of the mining reward because it's only been 1 day post-halving. So we will certainly see as we move forward over the next few days. So again, I want everybody to kind of be educated on both sides of this argument. And let me know, chime in down below. Let me know what you guys think. Are we going to see minor capitulation? Are we not going to see minor capitulation? What seems more likely? Do you feel that these are compelling arguments? And if these are not compelling arguments, what do you guys think is going to be, just the fundamental catalyst for what we're going to see? Just, again, what we've covered, everything that we've covered. Is there something that we haven't, or is there something happening that we haven't covered? All right, our final story for the day, as I covered just a little bit earlier. Now, something that we've recently touched on is the concept of Bitcoin's monetary hardening. And that's a term which was coined and popularized in Grayscale's recent report. And we talked about how they have used it to describe the Bitcoin halving as fundamental to why its proponents consider it to be hard money, as its monetary policy is mostly set in stone and stands in stark contrast to what the Federal Reserve Bank and central banks around the world are doing with our current monetary system, with our global monetary system. So while Bitcoin has just completed another hardening milestone on its way to the hard cap of less than 21 million coins, fiat currency continues getting even easier as money and monetary policy becomes even looser following another historic move by the United States Central Bank. This, of course, relates to the news coming out of the Fed yesterday when they published a presser which confirmed that the central bank is about to begin launching its corporate debt exchange traded fund buying program. Yes, that's right. For a limited time offer, if you are a business in debt, you're holding on to non-profitable ETFs, don't worry. The central bank is there to take them off of your balance books. Don't you worry. Now, this is known, we talked about this a while ago when it was first announced, this kind of slush fund, known as the Secondary Market Corporate Credit Facility, the SMCCF. Yes, that's a long acronym that basically means, and it's also known, there's a secondary program too called the Primary Market Corporate Credit Facility, the PMCCF, which is a slightly different acronym, which translates into these two vehicles are going to begin working, quote unquote, in the near future, right? Now, this was hinted at back in March in the wake of the market crisis that sent stocks crashing, Bitcoin crashing, gold crashing, employment crashing, approval rates crashing, that the Fed will be, for the first time in its history, purchasing exchange-traded funds, ETFs, to artificially maintain the appearance of normality in the financial markets. The Treasury Department has already earmarked $37.5 billion of the $75 billion total equity investment it plans to make in this new vehicle, being dubbed a special purpose vehicle established by the Federal Reserve for the SMCCF and PMCCF. I'm sorry, what I really meant to say was so just to kind of back up here a little bit, right? So this is not in the Fed's charter. They had to create, in conjunction with the Treasury, this special purpose vehicle. Oh my God. The sheer scale of this economic intervention has resulted in quite a lot of criticism from the moment it was unveiled. All right. Quoting this article, Jeffrey Gundlach, the CEO of DoubleLine, publicly questioned its legality on Twitter, on the Tweetor. Writing on Twitter, Gundlach stated that the Federal Reserve is presently acting in blatant noncompliance with the Federal Reserve Act of 1913. An institution violating the rules of its own charter is de facto admitting that said institution has failed and is fundamentally broken. Drop the mic. A little bit more. Travis Kling, he's the CEO of Ikigai. I always mispronounce that. Echoed that tone in his tweet yesterday when he wrote, "Today, Bitcoin's block reward was programmatically cut in half, as it is every 4 years, like clockwork. Tomorrow, for the first time in the history of the United States, the Federal Reserve will purchase ETFs, hard versus soft, sound versus unsound." Of course, it's no secret that Bitcoin enthusiasts and gold bugs have been sounding the alarm about central bank monetary policy for years, and it's only reaching a crescendo in the wake of this unprecedented fiscal response to this coronavirus COVID SARS-CoV-2 pandemic. Among the most vocal public critics, famous RT host Max Kaiser on his Kaiser Report show with Morgan Creek CEO Mark Yesko recently, who likewise contended that the Fed's actions go so far as buying up ETFs with the new program have no legal basis whatsoever. Now, on the flip side, multiple Bitcoin ETF proposals have been long anticipated by the crypto community, but rejected over and over and over by United States regulators and have yet to get the green light. Now, many are crying foul over the idea today that ETFs are being bought up by the Fed using new emergency powers and deployment of these special purpose vehicles to do so, but at the same time, throwing up roadblocks for the competing industry along the way, as being largely unfair and a conspicuous example of exactly what's wrong with the modern financial markets and central monetary authorities today. So, let me know what you guys think in the comment section. Regulators! Let me know what you guys think in the comment section down below. Is this the Fed overstepping their bounds? Or, hey man, government, do what they want. Who are you to say? Right? You're just a dude on YouTube, which I am, just a dude on YouTube. Let me know in the comment section down below. Excited to hear your thoughts. With that being said, let's hop back over into the live stream. Let's see if shorters have been absolutely liquidated yet. Oh, you know what? I didn't cover. I'm going to get to that right now. Eli back. I just remember I had written it down as a note here, and then I got on with the flow of the show. Eli back. Thank you again for the $10 tip. Let's look at X-Haven protocol for you, my friend. All right. We got the Haven. All right, let's take a look at Haven here. All right, so Haven bottomed out in September of 2019, rode a peak, formed a new high in January of 2020, largely established that as a high, had a nice spring here and is coming up to retest the highs. So we are kind of looking at a breakout here of Haven. We're really trying to move from what could be a long-term accumulation cycle into a kind of a nice bull run. This is all predicated on the fact that we are going to see finally alt sneezing, that we are going to finally see alt sneezing. I like to call it alt sneezing because, you know, price runs up and then, you know, Bitcoin sneezes and alt season goes away. So let's just take a glance here. You know, let's run this through our kind of classic technical analysis here, which can help when we're kind of looking at these long-term fundamental things, right? Let's look at Xhaven on the weekly. Yeah, it's funny, as Xhaven actually flipped bullish back over here on this weekly. If you had a bought here, it'd have been a pretty good area, right? This area has been retested as previous resistance turned support, and we're back up overall at this resistance zone where we've been unable to break out above for quite a while, which really starts at about 5,500 in my estimation. And we can really see that really well here on the weekly time frame. You know, this is the Gandalf line, right? You know, the Gandalf line. And it makes sense because this was previous support before the final last one weekly run up in Xhaven's history. And down we go. We've just been consolidating below this for a while. Riding above the 10 exponential moving average on the weekly time frame, the 10 exponential moving average is above the 20 simple moving average. So we do have a potential hanging man candle on the weekly. It's only Tuesday. Let's see how the weekly closes. I would like to make my decision based off of that. On the daily time frame, this is certainly not a low area to be buying price. You are basically buying up at resistance here. Positive things to note is that we have had a nice bullish move to the upside. Every dip has been bought up and we are consolidating at resistance. I do always like to see that because consolidation at resistance is usually a bullish sign. This isn't really the trade setup that I like to look for. Chaikin money flow is obviously quite positive, indicating that volume is still flowing in and everything is not, you know, not extreme. We're not in any overbought territory on the daily, so we do definitely have room to grow. So I would say in the short term, Xhaven protocol, I could see us running up to retag this resistance at about 5,800. I'm sorry, it was 5,800, not 5,500, 5,800. Yeah, 5,800 is kind of the shelf of resistance that we formed. 5,800 seems like a logical take profit area for me. And then if I can see us actually break above 5,800 and then hold 5,800 as support or consolidate here, then Bob's your uncle. Sometimes we don't get that kind of nice, sweet price movement. Sometimes, especially with altcoins, especially with these kind of, you know, in the 1,000. So these are not low sats, these are mid sats. You know, price just runs. Price just runs. And this is even borderline low sat. So price just runs. So yeah, that's what I would be looking for. I would want to be out of this trade if we fall down here, you know, really, if we really kind of close the daily below this accumulation level. So if we close below, let's say 47.50, just calling it pretty tight. We get below 47.50 here, I don't think I'd want to be in this trade anymore. I would like to see us kind of reconsolidate here, reaccumulate, and break to resistance here. So that is a decent trade. Looking for about a 12 to 13% movement there. And then we'll see if we can get some nice accumulation there, if we can go for even more. Now, keeping it a little bit more simpler, for me anyways. Let's see here. Looking at my trading strategy, overall things are positive. We don't yet have an exit signal. Let's see here. Price is bullish. We're pretty far above the baseline, which means we're a little overstretched. Look at Minx here. Minx is in the bullish control zone. And kind of cruising up. So other thing we could watch for is this Minx continuation sign right here to help us push to the upside, actually give us the objective signal to go long. Parallax is bullish. Auditar explosion is relatively bullish. This doesn't look bad, right? It's not. This is not my trade setup, and I would be wary of trading into fundamentals. But you've got maybe 2 weeks, so maybe we've got room for this thing to actually give a run up. Again, like I said, you've got overhead resistance at 5,800, and maybe that's going to be the move, and maybe even higher after following the mainnet. So trade safely. I wouldn't want to be in this trade if we close below 47.50. I would want to wait for a better buying opportunity. Let's see here. RK says, hey, Justin, how much buying does it take to move the price of Bitcoin? That all entirely depends on the order book and the exchange that you're on. So it's pretty simple. We can just go look over at Tensor Charts right now, for example. Tensor Charts is actually giving us some pretty bearish signals, right? There were some big sells coming in here. Volume delta divergence did flip negative over these last previous ascensions here. All right, so here we go. So here's the bid-ask ratio. Here's the order book right here. We can see that at the 88.60 price. Now, Tensor Charts puts these in bends of $10. Like, so we go 88.60, 88.70. So the reality is actually a little bit more granular, but let's just say that your order book looks like this. Right now, you can see that there's, and it's rapidly changing, but there's about 20.38, 20, 26, 28, and rising. Bitcoin sitting at the lowest possible ask, right? Which means if you want to market buy Bitcoin, that's the price that you'll pay. So you would need to market buy, or you would need to market buy the number there to move the price up to 88.60. Whenever you buy, you're going to buy at the current available ask, and that's going to move, if that is higher than the last traded price, you're going to move up there. So for example, let's say this quantity number was 1, and then there was like another 1 up here, and you market bought 2 Bitcoin. Well, you would jump the price from 88.47, which was the last traded price, now 48, now 88.43, now 88.49, to 88.60. Right? You would clear out, and then the last traded price would become what you paid, which you were the last buyer, is 88.60. So it all depends on the market. All depends on the exchange. Zuhair Nakvi, thank you so much for the $5 chip. He says, what's the secret to your calm demeanor while trading such volatile assets besides risk management? I mean, that's a huge part of it, right? I know what my max downside is every single day, every single trade. I've been doing this for a long time. I've had a lot of winners. I've had a lot of losers. And I've seen that in the end, it doesn't matter if I take 5 losers in a row. It doesn't matter if I take 10 losers in a row. It doesn't matter if I take 3 losers in a row. It doesn't matter if I really thought a trade was going to play out and I like short the bottom and long the top and just get punched in the face. It doesn't matter. My strategy is profitable. I've kind of dedicated my life to helping teach other people how to build profitable strategies of their own because I just got sick and tired of watching people go through the agony of building trading strategies. I mean, people that are objectively, mathematically, and programmatically like much more capable than I am. So many people come to this hill and die on it. How do I build a back tester? How do I test a strategy? How do I build a strategy? How do I even begin? And I with relatively, came in with relatively little mathematical or programmatic experience, now am in the position of teaching this. That's because I just was patient. I just plodded along patiently and built my strategy and system up and, formed a thesis, a curriculum for how to do that. Yeah, I think it just comes with time in the market, and this is just kind of what I tell everybody, that the amount of money, that you have in the market right now is not overall as important as you think it is. That number is going to be larger in the future, and you're going to be making much bigger decisions in the future. And you just need to, be careful and cautious how you implement, your trading right now. Like if, you don't want to put a lot of money on the line when you don't have any stats, when you don't have any statistics, when you haven't even tested your strategy out. You want to be cautious and careful and kind of ease into it. Sometimes these things can take a long time. Some people build strategies in 3 days. Some people build strategies in 3 months. Sometimes it takes people 3 years, and it's totally fine. It's worth the process. Now, I don't think that, on average, people who go through the curriculum are usually done in about 6 months, but it's everybody's a little bit different. So yeah, I mean, overall, you kind of get to this attitude where you don't care what price is doing, right? Everybody, asks me all the time, like, hey, what do you think about price doing this? What do you think about price doing that? And if it has nothing to do with any of my strategy metrics, then it really doesn't matter to me, right? Have you considered this metric? Have you looked at that metric? What's your opinion about this? I don't know. Thinking about that or reacting off of that never made me any money. But if I just wait for this, which I've tested thoroughly to know that if I wait for this, statistically, I'll have an edge to make money acting off of this this input, then so it just time, consistency, and patience, my friend, and sitting on your hands a whole lot. But don't get me wrong, like I have my days, like, and I've had plenty of days like moving up over the last 10 years now almost. So it's totally fine. Like if you're just starting out in trading, or if you've only been trading for a year and you're still punching holes in your wall, it's okay. You'll get over it. That will go away. FOMO into UBT, bro. It's time. Let's go. Market buy that right on the stream. Let's go. I'm about to market buy into red coin right now. A FOMO right into red coin. Go, baby. Neil Love says, do I have any open positions in Bitcoin at the moment? Yeah. They're all short. 2. I have a hedge short and a at-risk short. Can I pull Hex up on trading via? No. Band? I think Marshall's trading Band. Band's putting in a pretty decent reversal here. Definitely giving you the exit signal for shorts. Let's see here. Nothing yet. We need to break above $1.2017 for continuation longs. It's already been a hell of a run. So like this was the last movement here. In here, out here. Let's see here. Re-entry here. And exit here. So kind of 2 swing trades, catching from this close to this close, and then from this close to this close. And then that's basically it. And then maybe probably a failed short right here. I didn't short Band because you can't short Band on Binance margin. All right. Here we go. All right, Richard Hart for the win. Congratulations. Congratulations, Hex investors. It's time to sell. Hey, no problem, new here. You know, I don't have a lot of thoughts on Hex. Congratulations to the hodlers for the win. David Rice says, for a trade of $500 and a move of 1%, how much does that trade cost? Well, what do you mean by cost? If you mean by cost, like how much you would lose or how much you would pay in fees? Depends on your fee structure of the exchange. Depends on your fee structure. Again, it depends on your fee structure. So I mean, like with no affiliates, no referrals, not holding BNB or anything like that, I believe it's 0.001%. 1/10 of 1%. But I think they might have lowered it to not 0.075. It should be equivalent with like ByBit and BitMEX. All right, it's 118. Well, it you know, it just be, you know, whatever your position size is times your fee percentage. So 500 times 0.00075, 37.5 cents. And then out. So times 2. So about, you know, 75 cents. All right. With that being said, guys, it's time to roll. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis, brought to you by the Cracking Cryptocurrency Premium Trading Group. If you guys are watching the charts and the markets pass you by, you're tired of trading with your gut, make sure to sign up and join our community. Begin building your own objective trading strategy. Take advantage of our education, mentoring, signals, and community at premium.crackingcryptocurrency.com or click the link in the description down below. If you guys are enjoying the content, make sure to subscribe to this channel, hit the bell icon so you can be notified every single time we go live, and smash the like button. That's the only way you can do it. Just slide that mouse down, click that like button. You know you want it. It's the only way that we can actually get our content out there because, you know, Google. With that being said, if you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, put it in the comment section down below. The team will respond to you over the next 24 to 48 hours, or maybe immediately, right? Particularly if you say something nice about Jason. Other than that, make sure that you guys go check out the John Eller's interview. Make sure that you guys go participate in Spectre Security Coin's Data Hunt event going on right now. datahunt.spectresecurity.io. Link in the description down below. Go get some free crypto. Trade safely out there, guys. There's a lot of volatility coming in. Mentally prepare yourselves for whatever happens in the markets right now. I think the market's going to go down a bit. So just mentally steel yourself for that. But do not forget why we're here. Do not forget the exciting asset class that we are in. And don't forget that you guys are all awesome inside. Trade safely, guys. I will see you tomorrow because we'll be live at 12 p.m. Central Standard Time for Wednesday's show. Cheers.